following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the March 18th, terrific Tuesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I'm grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that empower human potential. Because living up to our potential, folks, that's something you and I, we must master each and every day. So let's begin our day with my favorite empowering beliefs because it puts it all together. And that is become your own electrician, the electrician of your beliefs. The reason is because beliefs have got the power to create as well as the power to destroy. But only you and I, we are the ones that have that awesome ability to take any experience of our lives and create a meaning that either disempowers us or one that can literally save our lives, can take us to places we never even dreamed of by empowering us. Think about it like this. There's only one thing that you can control in life, and that is the meaning that you give to something. That's truly the beauty of the markets that we trade here. We've got bulls. We've got bears. One that sees an event as a selling opportunity, one a buying opportunity. You see, it's your beliefs. It's the meaning that you give to these events. These are the things that you are in control of. What is the meaning? Pretty cool when you think about it, because what we can or cannot do and how you apply this to life, what we consider possible or impossible, truly is rarely a function of our true capabilities. It's more likely a function of the beliefs about who we are, who we've become. And that matters because all breakthroughs, and I do mean all breakthroughs, we're always looking for breakthroughs. It does not matter what level you're at. They all begin with a change in beliefs. And the question is always, how do we change? And I've found the most effective way to change is to link our brain, associate massive pain to a disempowering belief. Because we must believe at our core, at our deepest level, that disempowering belief has cost us in our past, will continue to cost us in the present, and ultimately only bring us pain in the future. That is what is called the Charles Dickens process. And here's the key. Knowing what you don't want is just as important as knowing what you do want. And the reason is because we need to rid ourselves of that disempowering belief. We got to pack it up. We got to ziplock it. We got to go ahead and send it off to space, and we've got to replace that little void of space with that new empowering belief. We've got to associate tremendous pleasure with adopting the new idea of a new belief system out there. And here's the key. And just like the markets we trade, we must know that in any moment, a decision that we make can and may change the course of our life forever. Could be the next person you stand in line behind. It could be the next person that you're on a phone call with. It could be the next phone call you receive. It could be the next movie you see, the next book you read, the next page you turn. It could be the next newsletter that you subscribe to. It could be the next thing that maybe even comes out of my mouth. I don't know. Any one of these things, folks, could be the one single thing that causes your floodgates to open. And then all the things that we've been waiting for will fall into place. I love it. Be the electrician of your own beliefs, folks. Let's go check out the electricity in these markets here. Right now, we've got the Dow trading up 69 points. It's trading out at 16,316. S&P is up 7.5, trading out at 1866 and change. NASDAQ up 22 points. Leading the charge here to the upside is the NASDAQ. So the weak link is now stepping up and stepping up to the plate. We'll see what kind of pitch it's going to hit today. It's trading out at 43.02. Russell 2000 up 4 points, up about 0.4% up, trading out at 1192. NDX 100 up 0.6%. It's trading out at 3683. New York Stock Exchange up 38 points out here. Goldilocks back $16 right now, trading at $13.56. Silver off 44 pennies. Light sweet crude up 61 cents. Our call number is 877-927-6648. Give us a call, folks. Happy to take a look at your stock chart. We've got the net advancing issues here of 1097. Nice run that we had inside the markets. Great wide price spread yesterday. No volume, but that's okay. Volume's only one portion of the patterns that exist in the stock market. There are other tools or other indicators out there. Right now, we're going to be paying attention to that net advancing issues at the close today, because should you see more than 680, I don't really mean 681. If you get more than 680, though, you will see that the Bears will have failed. They will have lost control of the markets. Right now, you're up at 1107. In the meantime, let's go check in on the markets here. Let's go start off by taking a look at the index. Let's go see what the S&P 500 is doing. It's trading out at 1866. 1866 happens to be the 0.68 retracement off of the most recent highs, the swing point high being March the 7th. That's at 1883.57. Down to the low that came in on Friday. That's at 1839.57. We've gotten up here in two trading sessions. Looks to me like the S&P wants to at least trade and make a move to the 0.786 area. That would be 1874 and a bit of change. Right there at the level of 1874.40. That's where we really saw, what was that, the last Tuesday? No, that was not Tuesday. That was last Wednesday, I believe, right? Tell you what it was. It was March 13th. You go back and figure out what the date was out there. That's where we saw that last downtrend. Oh, that was Thursday. I can figure that out, right? I just have to subtract days out here. But I'm multitasking, so you got to cut me just a tad bit of slack out here. So it looks like that's where the S&P wants to trade to, at least at a minimum out here. But what we would see here today, with more than 680 net advancing issues, you'd probably say that yesterday's move becomes a new initiation, and actually you'd see prices go back and not just make a run for the 1883 mark, but perhaps form what could be inside the S&P 500, one heck of a large A to B equals CD to the upside. We'll take things one moment at a time. Well, maybe we won't take things one moment at a time. As long as we're here on the daily chart, let's go look at the weekly chart. Let's switch this over and take a look at the weekly time frame, see what the weekly chart for the S&P 500 is doing out here. So the S&P 500 last week formed that little bear sash candle out here. We've seen these before where it doesn't matter. The bears get a decent foothold in here. And that says that you've got some resistance at the high of the week prior, March 7th. That's at 1883.57. So here's the number at 1866. You get a close above 1883.57, depending on volume. If you take it out with you got a market that's going to continue rising. Of course, if you take it out with volume, you then would have a confirmed A to B equals CD to the upside inside of the S&P out here. But it looks like the highs want to be tested. Hey, the weekly chart. Now, here's one thing. Even though you got a bearish engulfing candle that formed last week, it never broke through the low of the prior week out here, and certainly we have not done that thus far. So the little skirmish that took place last week is being erased fairly quickly out here. That's inside the S&P 500 on the weekly. On the monthly chart out here, monthly chart is going to say there's no bears anywhere in place out here. The monthly chart says it wants to still get to 2350, and that's that 16-year, 800-point consolidation range that it had been traveling in, that it broke out of back in April of 2013. So 2350 is a longer-term price objective, minimum price objective, I should say, to equal the measured move of that 16-year consolidation out here. On the monthly chart, although price is rising on less relative strength right now, we now have the divergence that we had not had in the past. So I'm actually going to get rid of that signal out there. But what that needs a few months in order to form out here. It needs another higher high, then it needs a reversal candle, and then a move lower. So at this moment here, the monthly chart is saying, motor on, boys and girls, motor on. In any event, let's go take a look at some of the other indexes out here. Let's go see what we've got going on inside. Let's see what pops up next. The Russell 2000. Russell 2000 yesterday popping and dropping, forming what looks like a little shooting star candle out here. Didn't really necessarily qualify as such because of the gap up. Nonetheless, the Russell 2000 basically made the 0.618 retracement yesterday. Price is going to get back up there again, 1197. Hey, if the S&P is going to shoot for its highs, why not the Russell 2000? It should at least try to make a move, and it's inside that swing point. That swing point I'm referring to, that wide price spread, accelerated volume swing point of March the 4th. It's trading inside there, the low of which is 1187.28. That says it ought to go test the highs, 12.82 out there. And that is on the daily chart. Let's take a look at a weekly chart here for the Russell 2000. Russell 2000 on the weekly chart does not have a reversal signal from last week. It qualifies as maybe a dark cloud cover, but that is of the five two-candle reversal signals. That is the second. How do I want to say this? It is not the first weakest. It's the second weakest out there. So it's a suspect. It's nothing more than the weatherman sticking his head out the door and saying, looks like partly cloudy with a chance of rain, of course, forgetting to look in the direction of maybe where the clouds are coming from. In any event, you do have some clouds out here, but not that significant, not that bullish. We take a look at a weekly chart for the Russell 2000. If we switch this over to the monthly time frame, the monthly time frame says it wants to get to 1350, and there is no reversal signal here on a monthly time frame. You just have the next primary trading range boundary line. That's what stopped the advance in price out here, about the 12, 12, 12, 13, 12, 15 area. We've seen a high of 12, 12, 82. The actual number, mathematically, as calculated by my system, came up with 12, 12, 94. Pretty cool, huh? So it closed above that 12, 13 area. That's what would set up that move then, probably to complete the move to 1350, and that is the 11-point, 500-point consolidation inside of the Russell 2000. So let's take a look at multiple time frames. That kind of helps you for the different trading styles that you would be taking a look at. Let's go check out the other indexes. Continue on. Let's motor on here. Let's take a look at the Dow. So the Dow being a supposed weak link out here, you can see it has made the 0.618 retracement. Big wide-ranging bar yesterday. 16,330 is the 0.618. You're trading at 16,326. 16,407 certainly looks to be on pace here for where the Dow would want to trade up to. Now, in the case of the Dow, we'll go take a look at when we look at the diamonds. The question is, what kind of volume is up here at that swing point high on March the 7th? If it's light volume, the diamonds then, the Dow could actually be forming a huge A to B equals CD to the upside out here. So that's what's going on the daily chart. Again, we take things one moment at a time. We just interpret the information based on the information that the market presents us. That's all that you can do out there. And then use these other tools like swing points, retracements, A to B equals CD patterns, expansions of swing points in order to be able to put on your high probability trade out there. If we look at the weekly chart here for the Dow, certainly you've got it's got its work cut out for us. So, the Dow here, this was a weekly chart, big consolidation, the yellow pattern. It completed that consolidation move once it finally broke out of there. This does have some resistance out here. Last week was a bearish engulfing candle out here. It says a resistance. The Dow needs to get above 16,505. I'd really have to say get above the December 31st swing point, which is at a price of 16,588. But this could be nothing more than just another consolidation. One consolidation and then another consolidation. Well, if the last one was 1,000 points, looks like this one is approximately 1,000 points as well. And that is on the weekly chart for the Dow. Monthly chart here, if we switch over to the monthly chart, the monthly chart here, the month of January did have a nice big bearish reversal signal, but that was taken back nearly completely. Basically, in my opinion, eliminated the bearish reversal signal. Right now here, if the Dow were to close at this stage, you've got a little doji candle out here. But we've got plenty of trading days left in the trading session. Right now, we've got the Dow up 98 points, S&P up 11, NASDAQ composite. We'll take a look at the composite, the NDX 100, when we get right back from this break.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the signal box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow up 98 points right now. S&P is up 10. Composite up 30. Russell 2000 up 6.5% out there. And to each of you that send me emails daily, periodically, whatever, thanks so much for taking the time to do it. Had a number of questions about just simply my newsletter service, Mastering Probability. The questions really about the expectancy table. How is it that I calculate that? So if you're watching this on Tiger TV, how is it that you should really use that for your trading out here? And the key, folks, is that the hurdle that each of us have to overcome in trading is really fear. Look, what we have to overcome in life is just simply fear. The only thing that holds us back from doing anything, quite frankly, is fear out there. And so when it comes to trading, if you want to eliminate fear, I'm going to give you the secret. It is the absolute secret. And that is this. Number one, have a consistent trading pattern that you like to trade, at least one trading pattern, and then take each and every trade on that trading pattern that sets up flawlessly. Take each and every trading pattern that sets up. What you want to then do is, then you want to be able, from that information, you can determine what your system or your trading expectancy. Look, even if you don't do that, and whatever it is, however it is you trade out there, you want to make sure you understand what your expectancy is. Because let's face it, if you've got a system that is not making any money, that does not have a positive expectancy, don't be looking for more trades out there. You should instead be looking for different tools to go ahead and improve your trading out there. And in order to do that, you want to break your trades into three categories. This is the summarized table over here if you watch this on Tiger TV. You're going to break them into winning trades, what I call controllable loss trades. That means you're going to enter into a trade, you're going to risk X percentage of your capital. Hopefully it's 1% or less out there. And you're also going to, and that's why we call that controllable, because when you lose, your stops are hit or what have you, you're taken out of the trade. What you've lost is what you wagered, your 1% risk out there. And then you've got what I call your uncontrollable loss. Not because you're uncontrollable, because the market goes ahead and jumps a stop out there and you have more than a 1% risk. And you want to know that. And you're going to keep track of the number of trades. Now, what I'm showing up on my screen here happens to be the Rhodes Momentum Indicator strategy system that we've been trading since August 8th. So since August 8th, we've done a total of 63 trades. 41 of them have been winning trades, 21 losing, and one where we had that uncontrollable loss, either because the market jumped our stop or maybe I had expanded our stop for what I thought was a good reason and turned out to be not such a good reason. In any event, that's going to go ahead and give you a number. That's going to give you an expectancy. The expectancy number for the Rhodes Momentum Indicator strategy, 0.35. That means on $100,000 since August 8th, if you took every single one of my trades, you would be up $22,000, $21,962 gross. Net, you have to subtract out your transaction fees or what have you. That's been trading. We've been trading this for over 7 months here. It says we should generate between 22 to 33% annual return. Now, that's compared to the, I don't have the S&P numbers out here. I think the S&P has done about, in that same time period, about 9%, something like that, around 9 versus the 22%. So you want to keep track of your closed winning positions. We closed out 2 trades yesterday. They were short positions. One was in the short the NDX 100, the SQQQ. The other was we went long the VIX, the TVIX, and was very simple. I used from a stop management standpoint. I use really many of the things that I talk about, discuss with you here, or teach on the air out here. So we closed out the market went ahead and closed us out yesterday as we went ahead and adjusted our stops. So we made some money on those 2 trades out here. Here's my losing positions that we have. So the whole idea is that you want to make sure that you keep your losses small. You want to try to let your longer trades run higher out there. Folks, now is a great time for you to go over to the homepage at TFNN.com, click on my name, go ahead and sign up for Mastering Probability. I'll teach you more. There's an entire workshop that you get with the course, a money management workshop that you can have. It's a 90-minute workshop out there. You got it with 30 days unconditional money-back guarantee. So now is the time to do that. Talk about now is the time. Now is the time to go take a look at the NDX 100 out there. So in the NDX 100, what we see here, it's moving up towards the 0.618 retracement level, 36.96 out here. In the marketplace is its next move. Looks like it's headed to at least the 37.14 area. That's your 0.786 retracement. Perhaps higher. We'll go check in on the Qs, the ETFs, in a few moments here. Let's take a look at the different time frames. So just as we did with the other indexes, if we take a look at the NDX 100, it too had a big bearish reversal signal, the biggest of all. So perhaps the NDX and the composite are the most important markets for us to be paying attention to, because should we see a close above 37, 38, 32, it will be off to the races to the upside out there. And really, when you take a look at the composite out here, I'll do that here momentarily. See if I can find that composite chart. Oh, can I do it before the break? It looks like the answer to that question is no, because I don't see it. When we come back, we'll take a look at the composite, then we'll go take a look at the ETF structures. The composite, what I want to take a look at, is trading into, or maybe trading into, the 2,000 swing point high on a monthly basis. 877-927-6648. Be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Biggest sectors with inside the S&P 500 right now. Let's see. Leading the charge, up 1.07% is the healthcare sector, the XLV. Right behind it, neck and neck here, the energy sector, the XLE is up a little over 1% as well. So those are the two big movers. The XLK is then in third place, up about just a little over 0.9% out there. Yeah, I mentioned the NASDAQ composite. And the NASDAQ composite, the area to take a look at, what is kind of cool or interesting here about this stock chart. Number one, this chart that we're looking at on my screen, it's a monthly chart for the composite. It was traveling in a 1,500-point consolidation range. It finally broke out of it for good November of 2012. It gives you a measured move price target of 4,400. What we've actually hit intra-session high here this month was 43.71. So very close to hitting that. Now, what it's doing, it's also tagged the swing point from March of 2000. So price has gotten all the way back to the March of 2000 highs out there. Now, not to the high, to the low of that swing point, which is at 43.55.69. They closed this month, meaning the month of March, inside that level. How about that? March of 2000. We're now at March of 2015. How about that for a 15-year time span? However, close inside 43.55.69, not just setting up the target to hit the 4,400 number, but does, when you close inside a swing point, volume, lack of volume doesn't really matter. It says you can go up to the highs out there at the 51.32 mark. Now, what's also interesting, though, as those highs are being hit, if you look at the bottom of my screen, not the very bottom, kind of the bottom price area, you're going to see a bunch of different humps. Those are nothing more than cycle patterns. And on a 11-month cycle pattern that exists out here inside of the NASDAQ, every 11 months, the NASDAQ makes a significant high or low, a significant swing point, high or low in the marketplace. The next one is scheduled to hit right around April. So we're in that March, April, because it's the 11th month. It's sometimes it's off by a month. Sometimes it goes on a little bit of a 12-month cycle out here. And in this case here, I'd have to say the April 30th would probably be the more likely time frame. Why? Because we're in the favorable price cycle period, right? You've heard of sell in May. That's the, but look, it's also, again, somebody's got to come up with a rhyme here of buy in November, right? November 1st. I don't know what that is. Maybe you can come up with something. You can email it to me, and then we'll use it on the show out here, and you'll get paid for the royalties on that. Okay, sure. And in any event here, so, with this cycle here ending at April 30th with getting back to the 2,000 highs, we'll see if price closes inside there. Maybe that's when we start to see, that's when we start to see some kind of a real cycle turn inside of the market. At this stage on a monthly basis, even though, the composite, the NASDAQ 100 is the weakest, it's really in reference to what? It's reference to the time frame that we'd be looking at, because on the monthly chart, it's the strongest. Because there's not even a reversal signal here. We saw reversal signals in the Dow. We saw reversal signals in the S&P 500. Even in, I believe, I don't know if we saw it in the Russell or what have you. There's no reversal signal here inside of the NASDAQ composite. So it's all really a matter of time frames out there. And no, I want something that rhymes, Joe. Sell in May, and we want not buy in October. We got something. What buying word rhymes with November? I don't know what that is. Somebody out there will. We'll create one. We can create our own name out there. But it's nice thinking. In any event, let's take a look here at the currency market. Let's go look at that. So we've taken a look at a number of different index charts, and yes, I'll go over and take a look at the ETF structures here in just a moment. Let's go check in on, since we're looking at different time frames out here, it is very important for us to be paying attention to, in my opinion, the Euro-Japanese yen. So let's take a look at it. And I'm starting to see more and more people talk about the Euro-Japanese yen, and so at some point in time, this correlation will go away. But at this stage, the correlation is still in effect out here. Here's the weekly chart for the Euro-Japanese yen. That red line on my chart out there, that's a resistance line that price has crossed. That's where we saw swing points here back in June of 2009, back in August of 2009, back in October of 2009. So that was a very good resistance level. And price came up into that area. It cleared that resistance level back here the week of November 29th, 2013. Breaks through there. Never came back and tested it until January of 2014. Tests that area, breaks back out, rejects it in the week of February 7th. That is the reason why that's important. And this is just simply a break above resistance. The reason why that's important is because there's no other resistance on a weekly chart for the Euro-Japanese yen until you get all the way up to the 169 mark out there. And if that's the case, if that's what we see out here, well, then the composite will probably take out those 2,000 highs. We'll take things one step at a time. Now, on the weekly chart, there is a bit of resistance that has now formed once we've broken through this area, and that's the resistance set up by that little dark cloud cover, some follow-through on the following 2 months. That says the number of 145.67 is very important, because that would then signal, okay, the market's ready to move out. Now, what's also important about that number is if we go and we take a look at the daily chart out here for the Euro-Japanese yen. So let's do that. I'm going to switch tabs for us, and we'll take a look at the daily chart. And the reason why that's important is because what I'm showing here is this 0.786 Gartley sell pattern that formed and confirmed. It confirmed it on March the 11th. Slight bit of follow-through on the next session on March 12th, and then quite a bit of follow-through here on March 13th. Now, the only problem is that as price was moving down, it was met with a breakout. And that's that wide-ranging bar on March 6th, the day of March 6th out there. In fact, it came down and tested that on Friday, and then yesterday you had a nice bullish engulfing candle out here. It says the bulls are really hanging out at these lows. Pattern has not failed. But if the pattern does fail, in this case here, we don't really have to wait. In my opinion, don't have to wait to the 145.67 mark out there. That's the highs as we took a look on the monthly chart. Quite frankly, if we were to see a close above 143.75, what typically happens is when 0.786 Gartley patterns fail, they turn into butterflies. That means you'd see a move back to the swing point high, which is resistance on the monthly, but the daily would be giving us a signal that this thing is ready to crack topside. If you're a bull, that's what you want to see. If you're a bear, that's what you don't want to see. In fact, if you're a bear, you want to see this 0.786 Gartley sell pattern here continue to hold. At this stage here, this has not necessarily gone along with the move in the market. Now, what this currency pair was doing, if I switch over here on the 120-minute chart, what you'll see was it was really actually sending off a signal here as our markets were moving lower on Wednesday and on Thursday, Friday, even Sunday night as the markets opened. The Euro-Japanese yen actually, because the low out here is from 9 o'clock in the morning on March the 14th. So our markets were moving lower on March the 14th, but the Euro-Japanese yen wasn't. It wasn't budging. Instead, it set up this little price relative strength divergent pattern. Even when the markets opened Sunday evening, it really didn't budge much to the downside out here. On the 120-minute basis. We did see a bit of a fall-off that took place beginning at 3 o'clock this morning. And, right now, so the bears want to see this. The bulls don't want to see this because here's a shorter-term chart. Now, here's a 120-minute chart for the Euro-Japanese yen. And you can see that price is really broken back through the bottom of the rising price channel. Bulls want to see price get back inside here. Bears want to see price stay out. But, look, that's only one of the elements out here inside of the currency market. The other currency is certainly going to be that VIX indicator. And if we take a look at the VIX, because that's a liquidity indicator as well, and you can see it is now back below the 50-day exponential moving average. 1435 is where it's trading at. 1486 is the number when the VIX is below the 50-day exponential moving average. There are two outcomes, only two outcomes. And one of those outcomes is not a market that goes south. But the two outcomes are either a market that trades sideways or a market that moves higher out there. And that is another way that you can go ahead and use the VIX index out here. I do believe we are in a market with high volatility in any event, let's go take a look. And right now, you've got the Dow's up 105. Pretty impressive when you take a look at the last 2 days moves in the market. We're up a good 350 points or so, at least off of the bottom of the futures contract. In any event, let's go take a look at the ETF structures out here. Let's pull those up on our screen. Let's take a look let's start with the Qs, see if there's any kind of volume here today behind the move in the Qs. The Qs have hit the 0.618 retracement. Excuse me, you're very close to it. 90.32 is the 0.618. It's gotten to 90.31. Volume so far, 10 million shares. Yesterday moving higher with light volume, 28 million shares. Looks like today's move is a bit better. Volume-wise, because we've only been trading for an hour and 14 minutes. Looks to me like the Qs want to at least go test the 90.93 number. That'll take you into the beginning of the downdraft. The 90.93, though, would also say, hey, if you're going to get up there and test that, you're going to test the swing point, right? The swing point high is 91.36, that is on March the 7th. In fact, you're already trading inside the swing point. How about that? So there, if you see it close today above 90.07, we've already got the volume, so it's coming into a swing point with volume, assuming that it can continue to muster up some volume here, and that this was not all a little short covering or something in the first half hour of trading out here. But 90.07 is the low of the swing point for March 7th. You're trading 90.26. You trade inside a swing point. Light or heavy volume says you want to go test the high. So the Qs are giving us the message that they want to go test the highs out there. Let's go take a look at let's take a look at the Qs on a weekly basis. Let me switch over here. Let's take a look at the weekly chart here for the QQQ. Give me a moment to find that out here. Let's take a look at this. The Qs here, so their resistance, they did have obviously last week, not obviously, but they did have a bearish engulfing candle, but no follow through. See, the whole key to trading, one of the keys here is always getting a second opinion. if your life's important to you and somebody were to diagnose something that was going to impact your life, wouldn't you want to get a second opinion out there? I say the answer is yes. And I think you want to do the same thing in the market out here. So whatever time frame it is you trade on, whatever signal it is that you get, go back and take a look at your trades and see if you would have performed better if you waited one more candle, Vasily, one more candle. If you had just waited one more candle for confirmation that the trade was going to go in your direction, even though it might have cost you more because your entry price would have been higher, what have you, would you have benefited more? And you should go back and take a look at your trades and determine whether a second opinion would be helpful to you in your trading out there for whatever the time frame it is that you trade. So in the case of the Qs, they've got some resistance for sure. 91.36 is the number out there, but it looks like that's where price wants to travel to. You're at $90.27 as we speak right now. Let's go take a look at the daily chart here for the SPYs, the SPY. Let's go see what it is doing. It is broken through the 0.618 retracement level. Volume today, 32 million. Really going against the downdraft with 155 million an hour of trading. It's really not too bad. I don't know what pace of volume we will see out here, but not too bad. What the SPY is also trying to do is trade into its swing point. So today, the number to be watching for 187.43 is the low of its March 7 swing point. Only 114 million shares there, so looks like it may be attacking that with volume in only the first hour of trading. But it closed inside there. It says it wants to move up to 188.96. That's the daily message of the SPYs. If we go take a look at the weekly message of the SPY. Let's switch over. We're going to see this little V-shaped bottom that has formed out here. Here are some of the other V-shaped bottom patterns. Take a look at the one here back in August of 2012. Again, this is a V-shaped pattern here. After it makes its 100% move of a move, it just travels sideways for a couple weeks and then goes ahead and takes off. Makes a retracement out there and forms another V-shaped bottom. If you take a look at this one here, it's made its 100% move of a move. And then last week really took off. And so the bearish candle here from last week is really being worked through. Any close above on the SPYs here, 188.96 says it wants higher price. So you've seen this nice, this nice little V shape. There's been several of them coming off of the lows back in 2011. That's what we really have that is unfolded here as we speak right now. Not until you see it close below that February 7th area, which is quite a ways down, by the way, 173.71. Well, you've seen a failure of this pattern because you will notice on all these little V-shaped patterns, the lows were never taken out. And so that'll be a key for those of you that are trading your retirement funds. To me, that would be the key. That's also a hammer candle, too, by the way. That would also be the key that on the intermediate time frame that a change in trend has taken place. But otherwise, as you take a look at this stock chart here, it's very difficult to find the bearish case other than last week's trading candle out here. But if you go ahead and you combine this week with last week, which is allowable. This is, you may not be able to combine foods, but we can combine candles out here. This bearish candle is basically gone by the wayside. But it's only 10:49 on Tuesday morning out here. In any event, let's go take a look at the daily chart here for the IWM. Let's go look at the IWM. Let's go see what it is doing out here. The IWM now trading above the 0.618 retracement level. We've got volume of 10 million shares out here. That's going into a downdraft with 50 million. But what's more important is it's really going to go test the highs, that high swing point that was created on March 4th out there. And that's where you might find some real resistance inside of the Russell 2000, the IWM at 120.58. Dow's up 100, S&P up 11. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you, other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's up about 93 points right now. S&P up about 10, trading out at 1868. And speaking of the week link out here, which has been the Nasdaq. I've got the 120-minute chart for the Nasdaq futures up on my screen, and referring to the Rhodes Momentum Indicator signals out here. One of those being a price relative strength divergent pattern that had formed as the market was making a low Sunday evening. Again, it's a 120-minute chart. This is the 8 p.m. I should say session. Sunday evening. Actually went ahead and the Rhodes Momentum Indicator. You can see if you're watching this on Tiger TV, I've got it this color coded as well. Red, clearly, stoplight, sell signal type of thing. I didn't want to paint it green because my candles, I like using green and red candles out here, so I've used a kind of a bluish purple type color. Once you see the market move into that level, that's where you're getting your buy signal. Inside of the Nasdaq futures, it actually gave you a buy signal yesterday morning at 6 o'clock in the morning. That's why we went ahead and even though we were short the Nasdaq, we went ahead and tightened up our stop and let the market do its thing out here. You really got a confirmed mode out here inside of the Well, you got a confirm mode on that 6 a.m. Bar out here. In any event, what you have seen, you see these little signals out here where you see either those red boxes or green boxes, and markets much like your heartbeat, it moves in a sine wave going from top to bottom within a certain range out there. If you've ever had a EKG, you've seen that heartbeat. Well, the market is nothing more than the heartbeat of buyers and sellers out there. And so there are ways to measure the heartbeat of the market, and that's in essence what the Rhodes momentum signals are forming out here. And where you like to, your other buy points are where the market is pushed lower, so there's been some type of normal retracement, and then you see a close above those signals out here. Well, we got the last one this morning at about 6 o'clock this morning, so it looks like 6 o'clock in the morning is when a lot of things happen inside of the NQ, so the early bird catches the worm out there. We did see the bears try to push price lower, but then on that next session here at 8 o'clock in the morning, you had a actual confirmed buy signal inside of the NQ, and that was on the 120-minute chart. Now, that does not mean that there's not some resistance overhead. There is, and as your pilot, I would tell you that as we approach this level here of the high of this bearish engulfing candle, and that's at the 37.13. In fact, I'd tell you we've got some turbulence ahead, and that is where you're going to determine whether or not the market, the NQs, are going to really be able to break out. So they should be headed towards this swing point high in about the 37.13-ish range. You're at 36.85 as we speak at the moment, and that is what the signals are. But it is terrific Tuesday, also known as Turnaround Tuesday for most of the most of the month here of February and March, with the exception really being last Tuesday. But at this stage here, looks pretty positive. So what you want to be watching for, what you want to be paying attention. By the way, here's the SPYs. I put the favorable cycle out here, the favorable cycle low, I should say, and that is when you've got a 6-month seasonal cycle, May through October 31st, May 1st or April 30th, however you want to look at it, and then you've got the favorable seasonal cycle, which is November 1st through April 30th. The black line out here is the low of when that cycle began. You can see the market is is doing what it should be doing. Now there is a confirmed A to B equals CD up inside of the SPY. The swing point being January 15th, which had 98 million shares, and the SPY gapped up through that with 167 million on March the 4th. So the SPYs do have a 1-to-1 A to B equals CD that would take you to the 194 level out there. So the IWM's got a confirmed A to B equals CD, as does the SPY. Pay attention to the VIX. If it's trading today below the 50-day exponential moving average and you are short, the VIX is saying you're probably wrong. 1487 is the number. Also pay attention to net advancing issues. Anything above 680 today, and right now you are at 1301. That is definitely telling you that the bears have lost their foothold on the market. Folks, have a great Wednesday. Stay tuned. Great Tuesday as well, because today's Tuesday. Stay tuned for our man Basil Chapman. Take care, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.